FHA loan requirements. Important FHA guidelines for borrowers. The FHA, or Federal Housing Administration, provides mortgage insurance on loans made by FHA-approved lenders. FHA insures these loans on single-family and multifamily homes in the United States and its territories. It is the largest insurer of residential mortgages in the world, insuring tens of millions of properties since 1934 when it was created. FICO score of at least 580 equals a 3.5% down payment. FICO score between 500 and 579 equals a 10% down payment. MIP, or mortgage insurance premium, is required. Debt-to-income ratio less than 43%. The home must be the borrower's primary residence. Borrower must have a steady income and proof of employment. FHA credit requirements cover more than just your FICO score. They also determine eligibility based on a borrower's payment history, bankruptcies, foreclosures, and extenuating circumstances that keep applicants from making timely payments. Your FHA lender will review your past credit performance while underwriting your loan. A good track record of timely payments will likely make you eligible for an FHA loan. The following list includes items that can negatively affect your loan eligibility. No credit history. If you don't have an established credit history or don't use traditional credit, your lender must obtain a non-traditional merged credit report or develop a credit history from other means. Bankruptcy. Bankruptcy does not disqualify a borrower from obtaining an FHA-insured mortgage. For Chapter 7 bankruptcy, at least 2 years must have elapsed and the borrower has either re-established good credit or chosen not to incur new credit obligations. Late payments. It's best to turn in your FHA loan application when you have a solid 12 months of on-time payments for all financial obligations. Foreclosure. Past foreclosures are not necessarily a roadblock to a new FHA home loan, but it depends on the circumstances. Collections, judgments, and federal debt. In general, FHA loan rules require the lender to determine that judgments are resolved or paid off prior to or at closing. Easier to qualify. FHA provides mortgage programs with lower requirements. This makes it easier for most borrowers to qualify, even those with questionable credit history and low credit scores. Competitive interest rates. FHA loans offer low interest rates to help homeowners afford their monthly housing payments. This is a great benefit when compared to the negative features of subprime mortgages. Bankruptcy and foreclosure. Having a bankruptcy or foreclosure in the past few years doesn't mean you can't qualify for an FHA loan. Re-establishing good credit and a solid payment history can help satisfy FHA requirements. Determining credit history. There are many ways a lender can assess your credit history, and it includes more than just looking at your credit card activity. Any type of payment, such as utility bills, rents, student loans, etc., should all reflect a good general pattern of reliability. Down payment requirements. While FHA loans can be had with as little as 3.5% down, conventional loans usually require a 20% down payment. These funds must come exclusively from FHA-approved sources, such as your savings account, money saved at home, investments you have cashed in, gift funds, etc. Mortgage insurance. Conventional loans usually require the borrower to carry private mortgage insurance if borrowers don't provide a minimum 20% down payment. FHA mortgages are different and require the payment of an upfront mortgage insurance premium and an annual mortgage insurance premium, MIP. Borrowers wishing to purchase a home with an FHA loan may need some help with the down payment. FHA loan rules not only regulate the source of funds in this way, it also governs who may provide such gifts. Be prepared to provide supporting documentation for the source of any financial gift associated with your home loan transaction. Gifts may be provided by borrower's family member, borrower's employer or labor union, a close friend with a clearly defined and documented interest in the borrower, a charitable organization, a governmental agency or public entity with a program providing homeownership assistance to low or moderate income families or first-time homebuyers, The FHA has calculated the maximum loan amounts that will insure for different parts of the country. These are collectively known as FHA lending limits. These loan limits are calculated and updated annually. They're influenced by the type of home, such as single family or duplex, and location. Some home buyers choose to purchase homes in counties where lending limits are higher, or may look for homes that fit within the limits of the place they want to live. While the FHA requirements define which closing costs are allowable as charges to the borrower, the specific costs and amounts that are deemed reasonable and customary are determined by each local FHA office. Lender's obligation fee, deposit verification fees, attorney's fees, the appraisal fee and any inspection fees, lender's origination fee, cost of title insurance and title examination, document preparation by a third party, property survey, credit reports, actual costs, transfer stamps, recording fees and taxes, test and certification fees, home inspection fees up to $200. As the buyer and borrower, you will have items on your checklist that are required by your lender, the seller, and even the title company. The closing checklist covers all the fees to be paid, the information to be provided, and the disclosures to be signed before the title is conveyed to you. Identification. All parties at the closing should have valid ID. Title insurance policy. You must pay for the title insurance that guarantees the property is free from previous claims or liens. Homeowner's insurance policy. Before you can close on the property, you need to secure homeowner's insurance, which insures the property in case of damage. Closing funds. You must bring all funds agreed upon in the form of a cashier's check or via electronic wire. FHA insured loans require mortgage insurance to protect lenders against losses that result from defaults on home mortgages. Depending on the terms and conditions of your home loan, most FHA loans today will require MIP for either 11 years or the lifetime of the mortgage. MIP rates for FHA loans over 15 years. If you take out a typical 30-year mortgage or anything greater than 15 years, your annual mortgage insurance premium will be as follows. In order to protect home buyers from getting into a home they cannot afford, FHA guidelines have been set in place requiring borrowers and/or their spouse to qualify according to the set debt-to-income ratios. These ratios are used to calculate whether or not the potential borrower is in a financial position that would allow them to meet the demands that are often included in owning a home.